this is something that is getting more popular. The percentages are up. These are non-QM loans. These are called non-qualified mortgage loans. This is a category of home loans that do not meet the traditional criteria set by Fannie Mae and Freddie Mac, which are the government-sponsored entities that are the big players in the mortgage industry. They're also not of the traditional criteria set by the FHA, VA, or the USDA. These are loans designed to accommodate borrowers with unique financial situations. So we're going to go over two products that are my favorite non-QM loans. We're going to go over the bank statement loan and the profit and loss statement loan. Okay? So let's go over who are some of the people who would benefit from a non-QM loan.
Oh, business owners.
Yeah. The big thing that stands out are self-employed individuals.
Yep.
Small business owners. But people with irregular income streams.
Yep.
So
Any, what's it called? Not landscaper. Was it freelancers?
yeah, freelance. Let's just say you're a streamer. You're a Twitch streamer. You're a professional gamer. This is a chance for you to buy your home. YouTuber, social media influencer.
Yeah. Different incomes other than your W-2 incomes.
Right. Let's just say you do commission-only sales and you just started that, and you only have 12 months of bank statement to show. You know, if you're making $100,000 a year doing that, you can buy a home without filing the taxes to show that.
That's another myth you busted, because people always think that you need W-2 income, you need work history, this, that, and third, but there's non-QM loan products out there that you could qualify for.
Correct. So let's go over the 12 to 24 month bank statement program. So 12 to 24 months are the set terms and periods of the bank statements. It's all the 12 to 24 months means. So you can either show 2 years of bank statements for a lower rate, or you can show 1 year for a slightly higher rate. So how it works is, instead of relying on those W-2s or tax returns
Or pay stubs.
or pay stubs, the lender is going to assess your income based on 12 to 24 month period of business bank statements, or with some bank statement programs, your personal bank statements. And they typically average these deposits over this period, and then they'll usually be an expense factor. So an expense factor is like if you do some sort of commission sales, typically you have a lower expense factor, because if you're selling, let's just say, cars, and you have an inventory and there's a cost of goods sold, then there's going to be a higher expense ratio. So let's just say, conservatively, you take, a lot of these will take up to 75% of your gross deposits. So if you made $200,000 in deposits, they'll qualify you based off of 75% of that $200,000.
That's $150,000 income.
Yeah, which is amazing. So like you said, some of the people these are ideal for are going to be your self-employed, business owners, people with fluctuating income, or people who might not show a high taxable income on their tax returns. Then we want to go over a little bit.
That's key right there.
Yes.
Business owners don't show high taxable income.
Yes.
But they have deposits coming in. They have income coming
Yes.
in. They do have expense, but we're qualifying this loan based on their income that's coming in, not what they reported at the end of the year.
Correct.
This is great for restaurant owners. This is great for like musician, actors. Anyone, again, has that variable income that has these deposits coming in, but at the end of the year, they have expenses. So great loan products for non-traditional income.
And you can actually use a bank statement program and only put 10% down.
Amazing.
Yeah. So you don't need 20% down. You don't need 30% down. Only 10% down for a bank statement program. So really quick, want to go over profit and loss statement loan program. Have you ever done a profit and loss statement?
No.
So I've done a few of these. I think they're amazing programs. So if you get a profit and loss statement prepared by your CPA or a tax preparer, they don't have to be a actual certified CPA, with 2 supporting bank statements, you can get qualified based off your profit and loss statement. So this is pretty much
on any business. It could be a profit and loss.
Yeah, it could be any type of self-employed business, sales, car dealership, restaurant, anything like that. So they do a profit and loss statement, and just need 2 bank statements to verify the profit and loss statement. This is really good for self-employed people who have significant deductions on their tax returns or report lower income on their taxes. So great for freelancers, small business owners, contractors who want to use their business's P&L to reflect their actual earnings.
This is why I love working on Loans Incorporated. There's so much out there that I'm not familiar with, but I feel like I do have a clientele, a demographic of clients that could benefit from this, and I'm glad you're talking about it.
Yeah, absolutely. Non-QM loans are great. Like I said, they're up. Non-QM loans have gone up in popularity because of the environment we're in the economy. There's more self-employed people taking risks, and these social media. There's so many more outlets for education on these loan products. Social media, email marketing. There's so many more loan products out there compared to what there was maybe even 5-10 years ago. So some of the pros, obviously, what would you say? Just the flexibility?
Oh, yeah.
Yeah.
Sounds like easier underwriting.
Yeah. Usually less documentation, and then obviously not having to provide tax returns if you're self-employed.
Because I've seen people who make a lot of money, but their taxable income due to the depreciation of the property or assets they own or expense of owning a business will substantially decrease their taxable income or the net income. And the W-2, we look at gross pay. So conventional FHA, VA, USDA, we're looking at gross pay on a W-2, but bank statement loans or profit and loss, we can also look at what's coming in. But if you are buying if you're buying a home, we use a conventional method and you're self-employed, we look at net income.
Yes.
That's a big difference if you're a business owner versus a W-2 is the fact that and this is not just a Loans Incorporated thing. This is a Fannie Freddie rule across America, all 50 states, across all banks is if you're a business owner, you're trying to buy a home conventional method, they have to look at your net taxable income or net income versus your gross income on a W-2. That's why there's an uptick or a rise in non-QM loans right now.
Yeah.
With the profit and loss statements and the bank statements. Because like you said, there's a lot more people taking risk and doing different jobs. It's not the W-2 anymore. It's not.
Gig economy.
Yes. Yep. Yeah.
DoorDash, Uber, all types of things.
The factory work lifestyles went out the window now. It's more of those.
Yep. So cons, higher interest rates. So these rates are typically 0.5 point to a point higher and larger down payment requirements. You're not going to get one of these loans with a 3% down payment. You're going to be looking 10% to start.
Alex, can you buy a house with a bank statement loan and put it under your LLC and not have it hit your credit? Or does it have to be a DSCR?
You can if it's an investment. So if you're doing an investment loan, it can't be your primary. You have to close. If you're going to close an LLC, it has to be an investment purchase. It has to be business purpose to go in your LLC.
That's good to know.